Now I'm going to talk about gaps, okay? And everybody knows there's a gap up or a gap down. So there are 5 types of gaps total. One is called the Novice Gap, and one is the Pro Gap, okay? And there are 3 more types of gap called Breakaway Gap, Runaway Gap, and Exhaustion Gap. So total 5 types of gaps. Now I am going to focus on a couple of gaps here. And the first one is a normal thing, just to show you what is Novice Gap, which you normally know that market closed higher and gaps up. That's a normal gap. And market closed down and it gaps down. That's a normal gap down. So whenever such a gap happens, the novices are not surprised, because it is usual if market closes near the high and if it gaps up, it was expected, right? So there's nothing new about it. But at the same time, those are novice gaps, and and we don't even realize. Of course, if you're long, we'll make money in the long upside gap, and in the downside gap, if you're short, you'll make money. And those gaps will act as support and resistance. That's a very simple, basic statement, basic rule of gaps. Or we can even use the word window. We use window or gap. Window in Japanese candlestick language, and gap in normal Western tools. Now I want to talk about the pro gap. What is pro gap? Pro gap is something which you can't see the gap, but there is a gap. Now let me show you that. It's basically our star concept, if you have seen my star videos. So this is pro gap. Now look at this, that market closed near the low, the black candle, and market opened with a gap. Now there is no gap on the candlestick like the earlier one, like the Novice Gap, but there is a gap between the closing and the opening of the price, right? There's a gap here, and there's the closing is here and opening is here. That means there's a gap between yesterday's close and today's open, but that gap cannot be seen, and that gap is called pro gap, gap by the professional, right? And how do we use this? First of all, this is a gap against the previous candle close. This is against, means ulta, opposite. Whereas if you see, this is in the direction. This is not against. It is in direction of gap up and gap down. And this is against. Second is it occurs due to unexpected overnight development. Means if there is a news like a global market or any announcement or any policy or any Saturday, Sunday event, that time this can happen. And this gap is generally created by the professional traders. And that means if you are a layman, generally gets trapped in this, and professional take advantage of this. Now let me show you some example of these gaps, right? And this is, can you see that this candle closed right at the bottom and it opened. Now you can't see the gap. See, you can see this gap. Now this is a Novice Gap, but this is the pro gap. If you can understand pro gap and act immediately means as soon as the market opens, that is where you can take advantage. So first we'll understand pro gaps, and then I'm going to talk about the options part of it. Now see this pro gap, and sometimes they can be big. Now see this, it's closed here and there's a gap here, right? And then there is closed at the high and there's a gap. This is called pro gap. There was a white candle and it opened lower, right? So this is called a pro gap. Even there is a gap here. There are many. There's a gap here, pro gap here, and then there is a gap not exactly here. So these are pro gaps where you can take action. Let me just show you. This is perfect. See how this black candle, look at this. There was a support here and that support broke and then gap up. Now most people get surprise attack because we had a very bad close the previous day. Usually we are expecting the market to open lower. It was closing below the support and still it gapped up next day. That means there is action by the professionals and the retailers are trapped. And that's where this is very, very high, this thing. All right, so this is the pro gap where I want to take action. Now, first, if I see a pro gap, what will I do? If I see a pro gap on the upside, then I'm going to cover my short if I'm short. And when do I cover my short? First minute, 9:16. Most people, when they see a pro gap, they are first of all in shock. What happened? And then they say, okay, I'm losing money. Let me hold or wait for some time, another 15 minutes, 1 hour, 2 hours. for the market to come back to the closing price, and then I will cover the position, which generally doesn't happen. So then you lose more money. See this, if you don't cover at the start of the day, you're going to end at the top of the day, and next couple of days it goes much higher. So if you are short, you are going to cover. Second, if you are neutral, means you have no position, you can take straight away take position in future long or cash long. But now let's say you don't want to take that risk, you are not sure to take that risk. What we can definitely do is write options, sell options. What does that mean? That after pro gap, I am not bearish anymore. I'm not sure whether it will go up or go up fast or slow, but I'm sure that after pro gap, it won't go down. So I'm going to sell a put in this case. I'm going to sell a call in this case. I'm going to sell a call in this case. I'm going to sell a call in this case. And there's a sell a put here, like sell a put here, then sell a call. See, this is a perfect pro gap. And in fact, there are names to each of these candles, which we have learned in Star Traders, Star Trader program. Some of you might be knowing there's name like bull sash and bull separating and bullish kicker and all that. But we don't need to know those names right now. We just need to know pro gap. If you understand pro gap, you can write options. See this pro gap here, closed at the low, opened higher. So the pro gap is happening between the trend also, at major resistance, at major support also. So there is a pro gap here. Look at this. If market goes up like this in the next 5-6 days, what does it mean to your put? It goes to zero. You can even buy a call, but buying a call, I would add one more dimension to it. Maybe we can cover that in the next webinar. But writing a put is like is very safe, and which we don't have to take much risk, and we just have to do nothing for the next few days and just relax and let the premium go down and let makes money on that time premium which we are getting. Hey, thanks for watching this video, and if you think you want to know more about options the way we teach you, the simple strategies without using any jargon like beta, gamma, theta, delta or open interest, using simple technical analysis, then I have this unique program called Options Mastery, and where you can help you to convert your small capital into big capital. And you want some free training on that, just go to malkanwebinar.com/om. You can see the link on this video, or you can click the link below and just go into that. Enjoy the free training. Let me click you and show you that page which you have here. Go there and you get a free webinar which I'm going to do very soon, and you can see the pre-training videos. If you don't know anything about options, you can see the video here for 1.5 hours. You can see my some live trades which I did in the market, how using the same strategies which I teach, how you can make money. Just go through this and you'll learn a lot about this. And if you like this video, make sure you share this video. Thank you so much. Till then, good luck and good trading.